Hello everyone, thanks for joining us today and welcome to this presentation of here's what your next strategy should look like. Now in today's presentation I'm actually going to be sharing with you two rules that make up one of our best trading strategies in virtually any market and any time frame. And here are two of the rules in action right now. As you look at this chart, this older chart of letter K, Kellogg, you see here I will share with you two rules today where you could have, even though this market looked like it was going sideways, you could have actually generated a buy signal, and as we can see, the stock gained another 10 points in the next 2 weeks. And then as we move on over onto Apple, we'll see here that with the two rules I will be sharing with you today, you would have generated a buy signal here as well, and the stock also gained 10 points in 3 days. So as you see, these are really powerful techniques that you can actually add on to any method you're currently using right now, or use one of our strategies as well. So we really feel strongly that this is what your next strategy should look like when you apply these two current rules. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And as you can see, we are all about educating you as traders. Our sole purpose is to educate you so that you can put the power back in your hands. We feel the reason why upwards of 80 to even 85% of all traders fail is because they're giving their power away. You're basically relying on someone or something else to tell you how to trade. Basically, look at your own trading decision-making process. Do you go to a chat room or a trading room every day? Do you read a blog to give you ideas on what you should do? Or do you listen to some trading guru tell you where to buy or where to sell? You're basically, telling the markets, I don't know how to do this, so tell me what to do. The reason why most traders trade this way, myself included, when I first started trading roughly 40 years ago, is because we're not supplied with the proper information and education in order to trade consistently. So this is what we do at Specialist Trading. I've been trading for nearly 40 years. I started my career on the floor of the Pacific Stock Exchange. I traded through the crash of 1987 and the bull market that followed. I've traded in straight up markets, straight down markets, sideways markets, just about every technique or methodology you can think of. So in my 40 years of experience, I know what works in terms of consistency, and I know what doesn't. So that's what we do at Specialist Trading. About 8 or 9 years ago, I teamed up with ProTrader Strategies, and we simply educate all of our students and members in over 110 countries around the world, and in virtually every state in the United States, we have students where we teach them the things that I've seen in my experience to work in terms of consistency. So today promises to be a great presentation because I'm going to share with you a couple of techniques that you can apply on to your own current trading strategy. And I really feel this is what your next trading strategy should look like. Okay? But as always, before we begin, we are required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these techniques and sharing with you what your strategy should be looking like in the future. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we're required to show you this. So please take a moment to view this disclaimer. And as we are doing that, taking a moment to view it, I would also like to take this time to invite each and every one of you to follow us on Twitter. So if you have a pencil and paper, you may want to copy down our handle right here. It's abbreviation for Specialist Trading. Each day I post different information, anywhere from financial wisdom to actual signals that our strategies have generated. In fact, today I posted a few buy signals that were generated in our stocks. But we don't just cover stocks, we also follow currency pairs as well as futures. So a lot of great information, although it is rather limited, but feel free to follow us on Twitter. Okay. With that said, remember, we are first and foremost an educational company. We feel this is what separates us from all the other websites or webinars you may go to, because that's our sole purpose. Even in these free presentations we give on a weekly basis, we like to educate you and leave you with something so that you can start using it in your personal trading right away. So as you can see, my goal is not to force feed you the perfect system, the perfect strategy, so that all you have to do is, blindly enter orders. We don't believe in that. My goal, as you see here, is to teach you how to trade with the Specialist Edge. It's the same edge I was taught some 40 years ago. This is the same edge we teach to all of our students and all of our members around the globe. Now, since we are an educational company and we want you to ask questions, but once again, if you've attended my presentations before, I have a lot of information, a lot of slides to share with you. So many times we will slow down the presentation if we wait for each question. So if you happen to have a question, kindly wait till the very end of the presentation. It won't be long, probably just in about 30 minutes from now, and we'll reserve the last 10 or 15 minutes for questions that you may have, okay? The only question I will answer is the most common one, and that is this being recorded? Yes, it is. We record all of our presentations. All of our attendees today will receive a link to this recording. So if you have to leave early, if you're having technical difficulties, we will send you a link to this recording, all right? All right, so kindly wait till the very end of the class to ask any questions, and then I will get to them right away. All right, so let's begin. Here's what you're going to be learning today, since this is going to be conducted like a classroom. I'm going to give you two edges. The first edge is how to trade in sync with the market, very simple but powerful edge. And then the second edge is a price bar pattern that you should be looking for in any strategy, in any technique. And this is really the basis for what your strategy should look like, these two really tremendous edges. And in fact, they make up two of the rules to one of our most consistent strategies, which I'll talk about a little later, because we'll share with you how to increase your odds even more while using these two edges. And I'm also going to start out by sharing with you some older charts just for educational purposes, but then as we go further in the presentation, I'll show more recent charts, in fact, charts as recent as yesterday, okay? All right, so edge number one, you must trade in sync with the trend, all right? This is Trading 101. Everyone knows this. This is nothing new. But if everyone knows this, why do most traders trade out of sync with the trend? Why are most traders failing? We feel it's because every educator, every website has their own idea of what the trend is. Some people think it's based on a higher time frame, where you have to look at the higher time frame to determine what the lower time frame is. A lot of people think, well, no, it's got to be a pattern or an indicator. All right. Let me share with you what we feel is the most powerful but simplest way to find out what the overall trend is in anything. As we look at this generic chart, someone looking at this would once again just say, well, there's no trend here, Steve. We're going down, then back up, then back down again. So this is what I've been taught is a rangy sideways whipsaw market. So you always want to stay out of these markets. So there's no trend, all right? That's the way most people would discern this. But that's not the way we do it at Specialist Trading. The way we find out what the overall trend is for anything, because it wouldn't matter if these were 5-minute charts, or if these were monthly bars or even weekly bars. It makes absolutely no difference. But as I've often stated before, you want to apply the 50-period moving average. And then you have to ask yourself, before you pull the trigger on any strategy, it doesn't matter, ask yourself, where is price in relation to that 50-period moving average? Because you'll only come up with two possible scenarios. Price will either be below or, like in this case, it will be above. And if price is above, the majority of price is above, well, then the overall trend is up. And if the overall trend is up, you should only be looking for buy setups, regardless of whatever you trade. It's that simple. We don't have to overcomplicate our trading. We don't have to go look at a different time frame. We don't have to look at tons of indicators. We just ask ourselves, where is price in relation to the 50-period moving average? If it's above, as it is in this example, well, then the overall trend is up. And remember, this could be a 5-minute chart. It could be a tick chart, or these could all be monthly bars. It makes no difference. Now, conversely, we could look at this generic chart and say, okay, well, once again, no trend here. We're just going sideways. I'm going to stay out of this until the news comes out on this particular issue, or until some indicator tells me something's overbought, oversold, or until that chat room I go to, they start talking about what I should do with this, all right? Do you see how this is the decision-making process for most people? You're always looking for someone or something else to tell you what to do. Well, you don't have to do that. All you have to do is apply the 50-period moving average, and then you ask yourself, where is price in relation to the 50-period moving average? If price is above, as we just saw, then the overall trend is up. But if price is below, as it is in this scenario, then the overall trend is down. If the overall trend is down, do we want to be a buyer? Absolutely not. We want to be only looking for sell signals. Now, just because we are below the 50, or even if we're above the 50, it doesn't mean that you buy or sell at the market. That's, you need some structure in order to do that. We're just telling you what side of the fence to be on. And if you look back at your last 10, 20 trades, I can almost guarantee you that the reason why you had some losers is because you were doing the exact opposite of this simple rule. You were probably selling above the 50-period moving average and buying below. Remember, we're not about giving you and telling you that you're going to make 100% next year and you're going to make tons and millions of dollars in the first year of trading. We don't believe in that. We think you should run from anyone who says that. But what we are about is giving you sound, consistent methods that have shown high levels of consistency over the years. So it's really about it being a numbers game, all right? 2 steps forward, 1 step back. If you apply this simple technique over and over again, you will get on that road to consistency. So that was edge number 1. Now edge number 2. We're going to look for bars that close either in the top or bottom 25% of their range, all right? So what do we mean by that? Well, let's look once again at this generic chart. As we see, it doesn't matter if this is a 5-minute chart, it doesn't matter if it's a monthly bar. It absolutely makes no difference because we simply want to divide this by 4 separate but equal parts here. And as you can see, 1, 2, 3, 4, if we close in that top 25%, well, the market is telling us, not some guy in a chat room or some trading guru or some webinar, but the market is telling you that that's an indication to buy because most likely it wants to go higher. So I can't think of a better edge to come from the actual source itself. All right, the source is telling you it wants to go higher, the chart you're trading. Now, conversely, a lot of people say, well, Steve, I trade candlesticks, so how do we measure that? There's no difference. In other words, you take the extreme high of the wick to the extreme low of the wick and divide by 4. If you close in that top 25%, it's the exact same thing. There's no difference if you're looking at range bars, candlestick bars, open, high, low, close bars. Absolutely makes no difference. Now, as we look here, that same chart, we're above the 50-period moving average. So if we're looking to buy, this is our second edge. We want to find bars such as these that close in the top 25% of their range. These are high probability areas that price will continue. And as you see there, price did continue. Now, we can do the same thing on the opposite side of the coin. We see this generic bar here. Once again, it could be a tick bar or a weekly bar. Makes absolutely no difference. We simply divide it by 4 separate but equal parts. And I know, you're going to say, well, how, Steve, I trade intraday. I can't sit there and divide every bar by 4. This is something after a few days practice, you'll be able to see in seconds, milliseconds. You won't have to divide anything by, by hand or using a calculator. You'll know when a bar closes in the bottom quarter of its range or the bottom 25%. And if it does, and if it's below the 50-period moving average, what is the market telling you? The only thing you should ever be listening to. The market is telling you that that's an indication to sell because it wants to most likely go lower. You can do this for yourself right now. Go look at any chart, apply a 50-period moving average, and as we can see here, even if you're looking at candlesticks, the same thing will apply. There's absolutely no difference. You take the high of the wick to the bottom of the wick, and if you close in the bottom 25% and you are below the 50-period moving average, as we are here, and as this red bar shows, well, you have a higher level of consistency that you are going in that direction. Remember, we're just trying to give you techniques and methods that have shown high levels of consistency throughout the years. And this is what your next strategy should look like. You shouldn't be trying to pick tops and bottoms because there's no consistency in that. I mean, that's basically like gambling. It's like going to Vegas and playing the slot machines. Those things are designed to give you winners every once in a while. All right, to make you feel and have this false sense of security that you're doing okay. But over time, you actually don't have anything to show for it. You're actually in the loss column. You're losing money. It's the same way with picking tops and bottoms. Every once in a while, you'll get a great winner and you'll think, boy, this is fantastic. It's so easy. This indicator or this technique I learned really picks these tops and bottoms great. But over time, if you stick with it, you'll wind up giving back everything you made, just like the slot machines, and you won't have anything to show for it. It's much better if you are in sync with the overall trend by simply applying a 50-period moving average, and then you look for bars that either close in the top 25% or the bottom 25%. You're really going to be in sync, and your next strategy should contain these, okay? Now, here's the great thing about this. Our most consistent strategy today, strategy number 4, contains both of these techniques. In fact, there's only 5 rules in the strategy. I just gave away 2 of them for free. And these are the most important because they make up the building or the foundation of a setup, of a signal. Now, let me tell you about some of the highlights of this particular strategy. It's for virtually all traders. So it doesn't matter if you've been trading for 40 years or for 40 minutes. Everyone gets the same basic format for strategy number 4. It was originally designed for traders looking to catch quick momentum moves, meaning that you get in and out rather quickly. This is what I started using on the trading floor because we would trade and get out of a trade 5 minutes later. But it doesn't have to be that way. We have ways in which in the courses how we can tell you how to hold on to a trade for much longer, days, weeks, even months if you'd like. Now, every strategy has a different intensity level. If level number 1 is the most intense of all strategies, meaning that you virtually can't even leave your computer, and level 3 is the most relaxed of all strategies, meaning you can enter an order and walk away for days or weeks if you like. Well, strategy number 4 is a very moderate number 2 level, all right? It only uses one indicator. And I guess what? I already shared with you what it was. It's the 50-period moving average. It's a pattern recognition type of strategy. We're looking for a specific pattern. Now, this can be applied to any market, any time frame, any direction. So it doesn't matter if you trade intraday futures or if you trade stocks on a daily or weekly basis or if you trade currency pairs on a monthly basis. Absolutely makes no difference, all right? Now, if you are a member of this course, you receive automatic buy and sell indications on your computer where you get little up and down indicators telling you when a buy signal or a sell signal has been generated. But remember, once again, we don't want to turn that into a crutch. We don't want to be the type of company where you just simply blindly buy or sell something without understanding the process. So those are only for educational purposes. After a while, you won't even need to look at them anymore. Our edge at specialist trading is consistency. We're not going to sit here and tell you that every trade works out and is a winner. In fact, I will show you a couple of examples where there were losers in just a few seconds. But it's all about consistency. Consistency is meaning you go 2 steps forward, 1 step back. You have a couple of winners, then maybe a small minor loss, but you have the faith and the confidence in knowing that most likely you're going to recoup that loss rather quickly. So that's what we're trying to teach and educate you, consistency, because consistency is the only thing that will sustain you. I knew tons of traders on the trading floor who made large amounts of money, from hundreds of thousands to actually millions of dollars in a relatively short time. And not one of those traders is still trading today because they've all been blown out. They've given it all back. So there's nothing that you can really say that success or consistency is about how much money you made. Consistency is longevity. It's being able to trade 20, 30, 40 years down the road. And that's what we're trying to instill in all of our members and hopefully in all of our attendees today. Now, as we look here, here's a chart, the Apple chart that I showed earlier in the presentation. What's the first thing we notice? Well, we're above the 50-period moving average. Even though we closed below, or I should say we opened below, we closed above. And in the closing, we closed in the top 25%. You don't need a calculator or divide this to know that we closed in the top quarter. So that generated a buy signal with the automatic software that we provide all of our students. Now, there's 3 other rules that have to be met that I'm sorry I can't divulge right now, but this is a strategy number 4 buy signal, and 2 of the rules I just revealed today are in this, as you can see. And that's how the stock went up roughly about 10 points in the next 3 days, all right? Works to the downside as well. Here's a chart of when. Where is price in relation to the 50-period moving average? The first thing you ask. It doesn't matter if you're trading strategy number 4 or if you're trading one of your strategies or someone else's. You should always ask yourself, this is what your next strategy should look like. Where is price in relation? Price is below, right? All right. So if price is below, are we a buyer? Absolutely not. We're only going to look for sell setups. And it doesn't have to be one of my setups, okay? It could be one of yours. It could be based off fundamental news. It can be based off of the tides of the ocean. Absolutely makes no difference. But you should only be looking for sell setups. And guess what? We have a bar here that closed in the bottom 25% of its range. So the software automatically generated a sell signal. So, as you can see, look what happened. This is why you always want to be in sync with the overall trend, and you want to listen to the market. The market tells you just about everything you need to know. The only problem is we're never trained to listen to the market. We're always trained to listen to news, to some guy in a chat room, to some guy on TV, even to some guy on a webinar. But I'm here to tell you that the only thing you should be listening to is the chart in front of you. That is the source. That's where everything comes from. That's where your signals are generated. Your signals are not generated from, from what some guy is saying in a trading room. Now, we talked about consistency. What does consistency mean? Consistency means 2 steps forward, but 1 step back. So we're aware that from time to time we will have losses, such as this scenario right here in this older chart of Tesla. We are below the 50-period moving average, so this tells us the overall trend is down. Even though we have been rising in price, we're still going to be sellers. We have to meet all of the rules. Now, the second rule is we close in the bottom 25%. Now, someone could say, well, what about this bar, Steve? This closed in the bottom 25%. Yes, but it doesn't meet all the other rules, which, once again, I can't share with you right now. It wouldn't be fair to the members of our strategy number 4 course. But this one did meet all of the other rules of the pattern we're looking for. So this generated an automatic sell signal. All right. So let's say this is your first trade. You're excited. You're like, okay, this is great. I'm going to go short Tesla. I realize it's an expensive stock, but I'm going to buy the puts, or I'm going to use some type of downward strategy for applying options, some type of negative spread. And so you're all excited, and look what happens. Turns into a loss. Okay. At this point, you're probably thinking, I'm just like all the other guys, just trying to sell you something that doesn't work. Remember, from time to time, you will have losses, but there are ways to increase our odds for success, okay? As we see here, here's another example in urban. Now, there's a buy signal. It meets all the requirements, all right? So let's say you jump in and you buy there. We're closed above the 50 period. We close in the top 25% and go straight down after you buy it, all right? So you probably don't want to trade this anymore. You've lost in Tesla. You've lost in urban. So now another sell signal has been generated, and you say, I'm not going to take this one because it didn't work with Tesla, so why should I take this? And this is the one that works. So once again, it's all about being able to refine and pick the best setups. But how do we do that? How do we increase our odds for success? Well, there is a way, and this is by applying another tool I learned on the floor, and that's called the PET-D. It is the best thing I know of for defining the short-term trend. Remember, we talked about the overall trend with the 50-period moving average. You can apply that anytime you'd like. But the short-term trend is what we need to really help us get in sync with a lot of these setups. So we've made this into a color bar tool. There's nothing you have to calculate. When I first used it on the floor some 40 years ago, we had to actually calculate it by hand. You don't have to do that. We've done all the work for you. It's a proprietary tool where it just colors the bars either green to tell you that the short-term trend is up, or red to tell you that the short-term trend is down. It's that simple. There's no work on your part other than knowing what those colors mean. So how do we apply it with our trading? Well, let's look at this example in Apple, all right? As we can see here, it's obviously in an uptrend, but this is through hindsight, all right? How could we have known earlier that it was in an uptrend? Because usually it takes us somewhere around these levels to figure like, well, this thing is going up. It's not just making a top and then rolling over. We went above this old high, and now we're just about breaking out here. So I'm going to buy on this breakout right here because it looks like we're really going to make brand new highs and keep going higher. So let's say you purchase Apple around these levels for the big run. And for a while, for the next couple of weeks, it does do very well. And so you're excited, even though it had a down day here, you're thinking, boy, this is going to be a great investment. And then look what happens. It falls out of bed. You probably have a loss, or if you're like most traders, you hold on to it hoping it's going to go up, but it just keeps going lower and lower. How could the PET-D have helped us in this situation? Remember, the PET-D is an early trend detector. It's not a system. It's not a trading strategy. It simply is a finely tuned way to tell you when a trend has most likely begun. And that is like half the battle, right? Now we know the overall trend because we apply the 50-period moving average, but the short-term trend helps us get in a lot quicker. For example, this is where we most likely would have gotten into Apple, somewhere right here. Wouldn't you have liked to know down here that we were already in an uptrend? Well, if you had applied the PET-D, you would have seen that these bars were green well before, 10 to 15 points earlier before we started to go up. And at the same time, you would have known once the bars changed red, well before the sell-off and the big drop down occurred, 10 to 15 points earlier that it was time to get out. So this is the beauty of the PET D. This is why we call it the early trend detector, because that's what it does. It's not generating any signals telling you where to buy or where to sell. It's just telling you the short-term trend, and are you in sync with the overall trend? It's telling you in advance many times that there's going to be a change. So how can we apply this with strategy number 4? Because strategy number 4 already has a high level of consistency. Well, when we combine the PET D with strategy number 4, we've actually found out that we've formulated probably one of our most consistent and highly successful packages. It's called our dynamic duo, because we put these really highly consistent techniques together, and now we've really ramped up our odds for success. Let me show you how to apply these two. We're still going to apply the rules to strategy number 4. I gave you 2 of those rules already. But if strategy 4 generates a buy signal, the PET D must color that bar green. So in other words, if we're above the 50 period, if we close in the top 25%, that very same bar should be colored green. It doesn't matter if the bar before it or all the bars before it are red. That bar should be green. Now conversely, if strategy number 4 generates a sell signal, in other words, if the bar is below the 50 period moving average and we close in the bottom 25% and then the remainder of the rules of the strategy are met, that bar must be colored red as a confirmation that we're going lower. It doesn't matter if the bar before it or all the bars before it are green. All we are concerned about is that that bar is colored red. It's that simple. There's no really extra work you have to do. You just want the confirmation coming from the PET D that you are in sync with the overall trend as well as the short-term trend. We have found that when we use this dynamic duo, we really increase our odds for consistency tremendously. All right, so let's look back at that example earlier we showed you in Tesla, where it met all the requirements for a strategy number 4 sell signal. Everything looked fantastic, and then we got stopped out because it went the opposite direction. Well, if we had applied the PET D, we want this to be colored red. So let's see what the PET D colored it. PET D colored it green. Remember, sell signals need to be colored red. So what would that have told us? Well, as a dynamic duo member, we would not have taken that trade because they didn't match up. And we would have not or never had a loss in that setup. We would have never taken the trade. So the PET D would have kept us out of trouble. How about that example in urban? Remember, we had a buy signal that the minute we got into it went straight down. Well, in order for a buy signal to be valid, it needed to be colored green. So let's add the PET D. And as you can see, all of the bars coming into that setup were red. So the PET D was already telling us, even though the pattern and everything else and the overall trend meets all the requirements, the short-term trend is down. So we don't want to buy if the short-term trend and the overall trend are out of sync. So once again, you would not have taken that trade and saved yourself a loss. So as we go further in time, we see here now that we have a sell signal. Now, originally, we never would have taken that trade because we said, boy, we've already suffered 2 losses. I'm not going to take another losing trade here. But with the PET D, we would never have taken those first 2 trades. We're still waiting for a nice setup. And here it is in urban, a sell setup. It meets all the requirements, and the PET D colored it red. So this would have been the first trade you took, and look what happened 3 days later. Got a nice profit to the downside. So this is the beauty. This is what your next strategy should look like. Regardless of what you trade, you can add the PET D to any strategy, and we really feel it will increase your odds for success tremendously. So let me show you some more examples on how well this dynamic duo works in virtually any market, any time frame, and any direction. And then we'll stop for questions at the very end, okay? All right, in JEC, first thing, where is price in relation to the 50-period moving average? This is what your strategy should look like. Price is above, right? So are we going to be selling JEC? Absolutely not. We're only going to be a buyer. All right. Now we have a bar that closes in the top 25% of its range from top to bottom of the wicks. And at the same time, it met all of the rules of strategy 4. So the add-on generated a buy signal. But let's say you're a little bit scared, maybe you're a first-time trader, you're not sure you want to take this trade. Well, to give you that added confidence, we add the PET D. And as we can see, even though the majority of these bars are green, all we're concerned about is the setup bar. Is the setup bar red or green? It must be green if it's a buy signal, and it is, so you have the confidence to take the trade. And it rose 6 points in the next week. See how simple this is. There's nobody you have to listen to. There's not tons of indicators. We only have one indicator. That's the 50-period moving average. You don't have to go to a chat room to find out if you should buy it or not. You don't have to listen to earnings and try to decide, are those good earnings? Are those bad earnings? We don't have to look at volume. It makes absolutely no difference. I stopped looking at all of these things some 40 years ago. All right? So if I stopped and I'm still here, why should you be looking at them? All right? How about PRGO, this older chart? Where is the majority of price in relation to the 50-period moving average? Price is below. So I don't care what some guy says in a chat room or thinks the institutions are creating a double or triple bottom right here. We're not going to be a buyer of this stock until we have consistent closes above the 50. Even though we popped up above, we still are closing, the majority of bars are closing below the 50. So there's no reason you should be listening to anything else other than the market telling you it wants to go lower. Remember, we only listen to the market. We don't care what some guy on TV is telling us about this stock, what some analyst is saying, because their track record is no better than anyone else's. So wouldn't it be a lot easier just to keep things simple, save your money, don't subscribe to all these services, and just listen to the market? Right here, the market is telling us until things change, it wants to go lower. All right, so we're going to be sellers. Now let's add some structure. Look for bars that close in the bottom 25%, and there's one right here and one right here. They both met all of the rules of strategy number 4. Now, in order to really feel the confidence to take this trade, because it is a rather expensive stock, $100 stock, you want to add the PET D. Maybe you're an option trader, you want to buy puts, maybe you want to use some type of negative spread. It's okay, but you want the confidence, so you add the PET D, and both those sell setup bars are colored red. So you're confident staying short. Even though nothing really has worked out yet, that's okay. Now remember, we're not listening to news, we're not listening to earnings, we're not listening to guys in a chat room, we're not listening to any type of outside sources. The market is telling us it wants to go lower. And as you can see, the stock dropped 40 points in the next 3 weeks. Obviously, some news came out. Obviously, something came out to make the stock drop a lot. But isn't it funny how we saw that well before? Why? Because the market tells you mostly in advance what it wants to do. The only trouble is we never listen to the market. We've never been taught to listen to the market. We're always taught, well, I can't do anything until the news comes out, or I can't do anything until the indicators line up. It's silly, that there's no higher level of confidence, in anything than simply listening to the market. Letter K here, all right? Someone looking at this would say, well, Steve, we're just going sideways once again. No, we're not. We're in an overall upward trend because the majority of price is closing above the 50 period. And we have a bar that closed in the top 25% that met all of the rules. So this is a valid buy signal. But let's say, once again, you're a little bit weary. You're saying, how can I buy in a sideways market? What if I buy and it's going to go straight down? Well, add the PET D. And you can see the PET D, even though we've been going sideways for nearly a month, the majority of all the bars are green. So the PET D is screaming that we're in an uptrend and we're going higher. So you want to take this signal. And the stock gained 10 points in 2 weeks, okay? Now, here's a great example of how the PET D will keep you out of trouble as well, because we're not going to tell you that it works perfectly on every trade. Sometimes it doesn't, but strategy number 4, that is, but the PET D will keep you out of these trades. Here is a valid buy setup using strategy number 4 on HRB, all right? Now, it's above the 50. Even though it just closed above, it's still a valid buy signal. Now, had you taken this trade, you probably would have lost money because the PET D was signaling that it was in a short-term downtrend. Even though the majority of the bars were green, that buy setup bar needs to be green, and it was red. So, having the dynamic duo, you would never take this trade. And it would have been a very good idea not to, because look what happened to the stock in the following 2 months. Now, the beauty of the PET D is that once we get in sync with the overall trend, once everything kicks in, well, you have a number of signals that are generated in the correct direction, short-term and longer-term, and you can have some very nice trades. Now here's an example in JP Morgan that happened just a few weeks ago. As we can see, we're kind of slowly drifting higher, but not a lot of movement. But it generated 3 buy signals according to strategy number 4. Right? If you wanted to take, a lot of our members take multiple signals. If you wanted the confidence to take all of these, all you have to do is add the PET D, and you can see that each and every one of these was colored green. So that's your confidence in taking these. And as you can see, the stock gained 10 points in the next 2 weeks. Now CVS, in the exact same time period, coming into November, is below the 50 period. So we're only going to take each individual stock for what it's telling us it wants to do. Now, JP Morgan, during the same time period, was above the 50. But CVS in the same time period is below. So that's all we're looking at, the stock we're trading. We don't need to look at sectors. We don't need to look at news. We just look at what the market is telling us. It's telling us it wants to go lower. Why? Because the overall trend is down. We're below the 50. And 2 sell signals were generated using strategy number 4. So far, they're working out fairly well. Had we added the PET D, it would have perhaps given you confidence to stay in a little bit longer, because the stock dropped 18 points in the next 3 weeks. Obviously, once again, some news came out where the stock really gapped down lower. But how did the PET D know as far back as September that we were in an overall downtrend and a short-term downtrend? See, that's the beauty of listening to the market. The PET D translates what the market wants to do on the short term. It's not a predictor. It's not telling you how low it will go or how high it will go. It's just telling you at the moment, at the close of that bar, are we in a short-term downtrend or a short-term uptrend? And once you combine it with the overall trend and then a few structured rules combined with strategy 4, you really have increased odds for success. It's really what your next strategy should look like. Now here's an example in the diamonds in October coming into November. As we see here, coming into November, we were well below the 50 period moving average, and a sell signal was generated. And we saw that once we added the PET D, well, it was a perfect dynamic duo setup. So we saw here that this ETF for the Dow Jones was telling us the market was going lower. Now, the very first week of November, right at the elections, guess what? We gapped up and we closed above the 50 period, a little bit more advanced, but still closed above, even though it's 1 bar, generated a buy signal, and was colored green. So that was the market, the Dow Jones Industrial, telling us that we're going to go higher. And that's the beauty of using this, because you can, it doesn't have to be just stocks. You can apply it to ETFs or indices, and it can be also applied as a market timing tool. So even if you don't trade the QQQs or the diamonds or the spiders, you could look for signals and apply the PET D to give you an idea of what the market direction is going to be. It's a great, great market timing tool as well. Now let's look at the EMini S&P, an entirely different market, entirely different time frame. I'm going to start with an older chart to show you how, once again, it's all about consistency, because sometimes setups won't work. Here's this was going last year in 2015, but a great, great setup showing you how oftentimes when you have losing trades, you're able to recoup them. On the 10th of August, a buy signal was generated using strategy number 4, and we add the PET D, and guess what? It's confirmed. It's colored green. So this was giving you the green light to take the trade, but most likely you would have been stopped out with a minor loss on this, okay? So that's okay. We know that losses are inevitable, that they will come from time to time. But as we go further in the future, we see later on in the month, on the 19th, a sell signal was generated, and it was colored red. So it was verified and confirmed by the PET D. So we jump back in. This time we're changing directions, and we're going short, and a 230-point gain in just 3 days to the downside. So this is the beauty of applying strategy 4 with the dynamic duo. Even though from time to time you may get some small minor losses, the beauty is in the consistency of these methods and their ability to recoup those losses, and rather quickly. Here's a 5-minute chart of the EMini Futures. Okay, we're switched to an entirely different time frame, and as we can see, we're above the 50 period moving average, and we have 2 buy signals generated. All we have to do is confirm them, and they're both colored green, and that was 10 points in just 3 hours, or $500 per contract. Now here's a 10-minute chart of the EMini during a really steep downward move. In fact, this is when the news came out about Brexit earlier this year. This is when the market gapped down rather strongly, and a lot of people thought, well, the market came down too quickly, too soon, were tremendously oversold. All the indicators are oversold. You got to buy it, right? Nope. Remember, that's listening to outside sources, tons of indicators, news. Those are all subjective. We want the market to tell us what it wants to do. And on this 10-minute time frame, where is price in relation to the 50-period moving average? Price is below. So we're not going to be a buyer at all until we have consistent closes above that. So as long as we're below, we're looking for sell signals. And in the first half hour of the day, a sell signal was generated. I'm sure because of the volatility, you may have been a little frightened to take that trade because we did gap down rather strongly. But if you had applied the PET D, you would have seen that that bar was colored red. That would have given you the confidence to take the trade. And another trade was generated at the end of the day. Had you held on to the next day, that's 70 points or $3,500 per contract in your favor. All because we didn't listen to overbought, oversold news. We didn't listen to what some guy's saying in a chat room. We just listened to the market. And in the 10-minute time frame, we're below the 50. So the overall trend is down and the bars are red. So the short-term trend is down. You want to be swimming with the current at your back. You don't want to be swimming upstream. The only people who lost money in this day were the people trying to pick a bottom. Remember, there's no consistency in doing that. Now here's just the last couple of weeks action on a 60-minute time frame. As you can see in the first part of this chart, we are below the 50-period moving average on an hourly basis. We had about 4 sell signals, and they were all profitable. And then once we crossed up above in the first week of November on a 60-minute time frame, we had about 4 buy signals, and all of them were profitable. Now, looking back in hindsight, someone would have said, well, what do I need the PET D for? Well, sometimes it works without the PET D, but it's just always nice to have it there as a confirmation tool because each and every one of these signals was confirmed using the PET D. Sell signals were colored red and the buy signals were colored green. So that would have given you the confidence to take these trades. Now, as we said earlier, a lot of people always say, well, Steve, these are older examples. How does this work, recently? Well, let me show you what happened yesterday. Yesterday, if you recall, trading the E-minis, it was a very strong upward day. We gapped up and we continued going higher and higher. Now, if you lost money yesterday, most likely it was because you were trying to pick a top. But as we look at this 5-minute chart of the E-mini yesterday, in fact, you can see going in the lower left-hand corner, this is 1121 down here. We gapped up and we've been above the 50-period moving average all day. So are we going to look for tops, places to sell? No. Now, sure, there were some places you would have been perfect selling here and maybe a little bit here, but why swim against the current? It's much easier to swim with the current at your back. Go with the flow. If the market is going higher, you want to jump on board and be a buyer. All right. So we're above the 50-period moving average, and we have a total of 5 buy signals that were generated. Now, if you were a little worried thinking that maybe the market's going to top out, all you had to do was apply the PET D. And each and every one of these buy signals was confirmed by the PET D. And you would have made money on each and every one of them. This was just yesterday on a 5-minute chart if you're an intraday trader. Now, for all you Forex traders, nothing changes. We don't change or alter anything simply because we switched over to a different market and time frame. Here's a 15-minute chart of the British pound. Okay. 4 buy signals were generated. Each one was confirmed by the PET D. And it took a little while. Sometimes it does to kick in. But after holding on for a while, well, we had a 600 point, or I should say 600 pip gain to the upside. And that's on a 15-minute chart. If you want to go to a higher time frame, well, here's a weekly chart of the Canadian dollar. The same 2 rules I taught you earlier. We're above the 50-period moving average. We don't have to change anything just because we're looking at a weekly chart. We still apply a 50-period moving average. You can see there on the bottom. And we have 2 bars here that close in the top 25% of their range. Each one was a buy signal generated. Now, if we applied the PET D, we see that the first one was colored red. So we would not have taken this signal. And it's a good thing we didn't. Now, even though we were purchasing at higher levels, it doesn't matter. You want to be in sync with the market whenever you're trading. You don't want to be out of sync. So it's a higher level of consistency by choosing the bars that are in sync with the strategy setup. So since this was a buy setup, you want to be making sure that the color is green and 1,100 pips or $11,000 in the next 6 months per contract. Lastly, we can go to the longest time frame we have here, a monthly time frame. And we ask ourselves the same question: where is price in relation to the 50-period moving average? Price is below. So are we going to be a buyer of the Australian dollar on a monthly time frame? Absolutely not. We're only going to be selling. Strategy number 4 signal was generated in 2014. Okay, this is if you're an investor of the currency pairs. And just to make sure that we were confirmed, we add the PET D and it's colored red. So this gives us the confidence to go short. The exact same rules we would use if we were looking at a 5-minute chart or a monthly chart. Nothing changes. And 2,300 pips in the next year to the downside coming into 2016. So let's recap before we go to questions and answers, okay? What did you learn today? I gave you 2 great edges that you should start applying to your current strategy, because this is what really will, in our opinion, increase your odds for consistency, and it's what your next strategy should look like. You should have both of these edges, regardless of what your strategy is based off. If it's based off the full moon or if it's based off fundamental news, makes no difference. You should be in sync with the overall trend. And how do you do that? You should have the 50-period moving average always on your strategy. If price is above, you will only take buy signals. If price is below, you will only take sell signals. Go back and do the homework. You'll see how you will increase your odds for success. Look at any chart, any time frame. It will really increase your odds for consistency. And if you want to ramp it up even more, add the next edge. Once your strategy, whatever it's based off, generates a buy signal, that setup bar should close in the top 25%, because that's the bar that's telling you if it's going to continue or not. Okay? If it generates a sell signal, the price bar pattern should close in the bottom 25%, and it should be below the 50-period moving average, because that's the market, not some guy in a webinar. It's the market telling you it wants to go lower. And ultimately, whatever strategy you're trading, your strategy should listen to what the market says, because that's where everything comes from. Lastly, we showed you how these 2 edges construct one of our best strategies in terms of consistency. Strategy number 4. I showed you examples in stocks, intraday futures, monthly bars of the currency pairs. It works in any market, any time frame. And then lastly, you want to increase your odds for consistency even more, we ramp it up by applying the PET D. When we put all this together, it creates our dynamic duo. We have so many testimonials, so many people coming back and telling us that for the very first time in years of trading, how they've become consistent by applying the dynamic duo to their trading. Okay? So here's our special today. We're going to offer you strategy number 4, along with the PET D, our dynamic duo. This includes 20 videos, all the entries, all the exits, all the stops, because I didn't go into detail with the rest of the rules. Remember, I just shared 2 of them with you. It includes all the signal alerts. It includes 4 more PET D trading techniques, ways in which to apply the PET D. It includes both the add-ons, so the little up and down indicators when a strategy signal has been generated, plus it includes the add-on to automatically change your color bars from green to red, as well as mentoring correspondence. This is our dynamic duo special. This is all included what we're offering today. Now, a lot of people always say, well, Steve, you know, the dynamic duo is great, but what about long term? You know, what about using the PET D for long term? Well, as an extra bonus, the PET D does work very well long term. So if you like to also invest as well as trade, let me show you how to apply it. There's a few things we have to change. But first of all, let's look at this monthly chart of the S&P 500 index. It's going back roughly about 22 years, okay? You see all the peaks and valleys here, from the dot-com crash to the banking crisis, all the way up to the tremendous rally we've had in the last, good 7 or 8 years, all right? How could the PET D have helped us? Well, we see when we apply the PET D how it captured all these moves. But even so, within these moves, every once in a while, there was an opposite color bar. Well, that doesn't mean we changed our overall direction status. All it means is that if we have 3 different bars, consecutive bars of a different color, that's when the trend changes. So we see here we had 1 red bar. That doesn't tell us anything. So we remain long all the way until 2001 when we had 3 red bars. That would have told us the bull market has concluded, and you would have missed all this downward move to the downside. Now, once you had 3 consecutive green bars, you're back in. You're back into the market. You get out of cash and get back in. And look, for the next 3 to 4 years, you're long all the way up until 2007, well before the crash started, the banking financial crisis started, and you're out on these 3 red bars, and you missed all this crash and this tremendous recession we had. Now in 2009, we have 3 green consecutive bars. You're back in. You're out of cash, back in. Whatever you're investing in, either investing in your 401k or different indices, it doesn't matter. But you're back in. And as you can see, from time to time, we have a splash of a couple of reds, but not enough to change direction. Remember, we need a total of 3. And in 2015 and 16, we had 2 consecutive red bars here, 2 different times, but we need 3. So we're still long and long-term bullish the markets until we get 3 consecutive red bars. Now, wouldn't you like to know when that happens? Wouldn't you like to know back in 2007 and in 2001 when there were 3 red bars, how you could have pulled out and gotten into cash and saved all of your hard-earned investments money? That's what the Pet D can do for you. But you can only know this if you're a member of the Pet D course and the Dynamic Duo course. So this is all included, all this all together. Now you see how powerful these 2 techniques are, and when you can apply this, including having nearly 40 years of experience as your personal mentor teaching you along the way. Now, just the very value of these 2 different programs would probably cost you close to $4,000, about $3,700. And we usually discount it about $700 for all of our attendees, down to $29.95. But guess what? We're not going to stop there. We're going to discount it even more. This is our special Dynamic Duo today only early Black Friday special. This is a tremendous discount. I don't think we've ever gone this low before. But for today only, we're having a 50% early Black Friday special. We're dropping the price down to $1497.50. Okay, that's for both of these together. That's for 20 detailed instructional videos, all the rules. You get the Pet D plus the strategy plus the add-ons plus 40 years of experience as your personal mentor there with you every step of the way. All you have to do is go to click on the live link that I believe is in the chat box on the far right hand corner, and then enter the promo code Friday50. And you will get the 50% early Black Friday special of $1497. It's a tremendous, tremendous deal. Here is the link, as you can see at the very bottom of the presentation there on the page. But that's not live. If you want to apply the live link, just simply look in the chat box on the far right-hand corner, and there's a live link. Now, a lot of people always ask, well, Steve, I want to do this, but I just want to make sure I have the correct software. Now, the Strategy 4 and the Pet D can be applied to MT4, to TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can use their live free stock data to run free on a free NinjaTrader platform, which we set you up with. So in other words, all you have to do, and Thinkorswim allows us to do this, we just have a router, we split the data feed, and we use it on a NinjaTrader platform that we supply you with. In fact, we even set you up with it for free. It's our tech. We have a great tech support department that does it for you automatically. So there's nothing you have to do. It's all set up for you, and you can just use the Pet D along with Strategy 4 indicators on NinjaTrader. In fact, some of our Thinkorswim users like NinjaTrader even more because of the way it's structured and set up. And that's all provided free. It's all included. So, as you can see, most of the major platforms are able to apply Strategy 4 along with the Pet D. I'm going to leave this information up here. Remember, Pro Trader Strategies, my sister site, handles all the questions concerning cost and concerning discounts. If you're having difficulty getting onto the link, just give them a call, 310-598-6677. They can set you up over the phone. Or if you have any more questions regarding sales or discounts, they can fill you in with that as well. Now, I'm going to answer any questions you may have for the next 10 minutes or so. I want to thank you for holding off, and I'm going to leave this page up here, so if you want more information, you can just simply look at this page. Let's see, a question here from Gwen. She's saying, does the Pet D correlate with Alexander Elder's red, green, and blue colored bars? If yes, how well does it correlate? No, it doesn't, Gwen. I've heard of Elder's different colored bar, but no, it's not based off that. And in fact, I'm not sure, but I think those color bars may repaint themselves. The beauty of the Pet D is that there is no readjusting or repainting. In other words, it translates at the very moment what the market is doing. And then sometimes, if there is a lot of volatility, you may see it, not a lot, but you may see it, change different colors while the bar is still open. And it'll only be either green or red. It's very simple. It's just green for uptrend, red for a short-term downtrend. But once that bar closes, whether it's a 5-minute bar, daily bar, weekly bar, that color will stay the same. I know a lot of people have complained about other type of charts where there are color bars and then they repaint themselves. And when they go back to retest or look at a setup, they go, wait a minute, the bar is a different color now. Or the PET-D doesn't do that. Once it closes, if it's a 2-minute bar or a monthly bar, once it closes, if it closes green, it stays green. If it closes red, it stays red. Okay, so I think that's the beauty of our PET-D. And trust me, I've been trading for nearly 40 years. I haven't seen anything work as well as the PET-D in terms of defining the short-term trend and as well as confirming my signals. Now, we know that Strategy 4 has a high level of consistency, but there are a lot of people that say, well, Steve, I love Strategy 4, but I also have another strategy I trade on my own too that I made up or maybe I got from someone else. Can I apply the PET-D to that as well? Sure. I really think that it will increase your odds for success even more if you apply the PET-D to anything. But we really have seen just by the testimonials and from our students how well the dynamic duo of Strategy 4 and PET-D work. So that's really what we feel the strongest about, okay? Let's see, Nuno says, Steve, the signals closing near or crossing the 50-period simple moving average are the better ones. Well, that's a specific way of trading. In the beginning, we always tell our beginning students to take signals closest to the 50-period moving average because those will keep your risk down. In other words, those will keep your risk parameters down. In the beginning, while you're learning, many students don't know how to really implement the rules correctly. And so rather than take each and every signal, we tell them to take the ones closest to the 50. But what we found even more important than that, and I'll share another secret with you today. And once again, you can apply this to any strategy or any technique. But if you're using our 50-period moving average, edge number 1, all right, and you're applying that technique where you're only going to take buy signals if price is above and only take sell signals if price is below, look for a strong sloping 50-period moving average, because that oftentimes will tell you that there's strong momentum or strong movement in that direction. So if you have a flat 50-period moving average, it's not telling you that you won't get a successful trade, but oftentimes, especially in the beginning, you want to see the ones where the 50-period moving average is moving very strong, almost in a 45-degree angle. That's for buy setups, or a 45-degree angle for sell setups, okay? That may help you more than trading close to the 50-period. Okay, I hope that answers your question. Let's see, A asks, what's the percentage that the PET-D is right? 100%? Well, once again, you can only have a percentage off of a strategy. In other words, something that tells you to buy here, to sell here. The PET-D is not a strategy, as I stated earlier. It's simply a trend detector. Okay, that's like saying, what's the percentage of the 200-day moving average? In regards to what? It's not telling you where to buy or where to sell. It's just telling you the overall trend. So you can only get percentages or numbers off of like systems, meaning that everything is traded the exact same way every time. And remember, as we stated in the beginning, we don't believe in that philosophy. We believe everyone should trade to their own means. That's why we give you strategy number 4, basic format. And then once you understand the basic format, then I, as your mentor, work with you to construct it to meet your needs. So you can trade it aggressively, you can trade it conservatively, you can trade it just getting in and out rather quickly, you can trade it staying as long as possible. Everyone should trade differently, and we encourage everyone to meet their own needs because that's the only way you're going to become consistent. That's why we don't have chat rooms or trade rooms, because then you would turn that into a crutch and you would say, well, okay, I guess someone is trading this way, so I guess I'm supposed to trade that way. And remember, if that works so well, then why aren't 80 to 85% of all traders successful? Because it doesn't work. There's no consistency. The great truth is that everyone needs to trade to their own persona, to their own risk, and type of, conservative or aggressive style of trading. So this is what we encourage, this is what we want. So we can't go back and back test everything because everyone trades differently. We have traders who say, Steve, this dynamic duo is amazing. I use it on tick charts, trading the E-mini, and that's the best. I find out that that's the best way to use it. Where I have other people giving me testimonials saying, Steve, I only use it on weekly bars. It's amazing. That's the best time frame to use. And there is no right or wrong or best one. It's whatever you feel the most comfortable with. Your risk parameters, the way you want to trade. So we can't give any figures because, we're not a systematic company. We don't believe in that. You can only give figures and statistics if everyone trades the same way. And that goes entirely against our philosophy, okay? Let's see here. Any more questions? Remember, there are a number of software platforms. If you have questions, if you didn't see yours on the list, call up Pro Trader Strategies. They'll answer any question you may have. Maybe there's one we didn't call off or read off that you can apply. But if you're really serious about taking your trading to the next level for 2017, I strongly urge, take advantage of this deep, deep, deep discount. All right. Normally, if you purchase these separately, it's like $3,700, all right, which Pro Trader Strategies handles all of that. They've instructed me to discount this down to $14.97, okay, but this is only for 1 day only. So this is really the cheapest I've ever seen it. You're basically getting everything. And if you learn how to trade it correctly, many of our students have said they make back the money in a matter of weeks. Now, we're not guaranteeing that. We're not promising you that, but we've had testimonials of people who have said that they've paid for everything very quickly. So it's up to you. Your success is due to how much work you're willing to put in. And I'm there with you every step of the way. I was answering emails earlier this morning by many of our students in the Dynamic Duo course already, asking questions on how to apply it. So don't worry. It's not something where we just, give you a DVD and say, okay, good luck. Let us know how it works. I'm there with you. You have correspondence with me. You have 39 to 40 years of experience with you every step of the way. So it's really a mentoring program. If you're interested in taking your trading to the next level of really becoming consistent for the first time, please take advantage of this great 24-hour offer. Remember, for today only, before the price goes back up significantly. Okay? I hope you got something out of today's presentation with the two edges I shared with you today, what I really feel strongly what your next strategy should look like, very similar to what we're offering you today. And I want to thank you so much. I wish you the best of luck in trading, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.